Rahul Singh joining us now, CIO-Equities, Tata Mutual Fund. We're discussing, of course, the sell-off that we're seeing on our screens as well as around the world this morning. Rahul, on the back of Corona, we've now got the crude fall and doesn't seem to be settling at all. No idea at the moment how to play this, given that there's so much uncertainty. What would be your advice this morning?
Well, I think the crude price decline and the impact on the global economy, I think, is a much bigger issue than even what the domestic economy is going through right now. I think we are in the process of bottoming out of the domestic economy. Having said that, I think what role global economy plays in this recovery is going to be extremely important. So if I were to overlay the domestic recovery, gradual recovery as it was over the next 6 to 12 months, on top of it, if you have a huge global headwind in terms of the economic growth rate and what impact does the commodities have on various parts of the corporate earnings in India, I think it is showing in the confusion in the market today in terms of the reaction which we have seen over the last 1 week and I think it will continue this week. I think one will have to look at it more dispassionately and look at what impact does it really have on India in terms of the current account, the benefits which are there. Even in the fiscal side, I think it opens up an elbow room for the government to really raise taxes on petroleum products, for example, and put the fiscal in place. So I think those opportunities or those advantages which come with a lag, and market realizes with a lag over a period of time. But the immediate reaction is one of similar to a risk-off kind of a reaction.
You made an important point that, the way markets are reacting on a risk-off measure, it's something which one, needs to see what's happening. But when crude falls like this, one would say India is a crude importer. It benefits crude, whenever crude goes down. But do you think a sudden such a fall, may lead to the risk-off sentiment being accentuated, which means that we may benefit, but we may not see that reflected in asset prices soon?
Yes, that's what I'm saying. I think immediately there is a risk that what you're saying is true. I think, but if you take a slightly longer view of 3 to 6 months, assuming that the coronavirus impact itself does not have a huge widespread kind of an impact on the Indian economy, I mean, that is a basic assumption here. We are still watching that situation unfold and seeing how that spread becomes either slower or faster. So far it's been on the moderate side, even though 1 week back there were no cases. I think the spread has been moderate. So that is the starting point. I think if that is controlled and there is no way for us to really take a big or a good call on that, if that gets contained and the domestic demand remains more or less steady, I think on the banking side, we will see resolutions. We will see what we have seen last week, I think, falling in place over a period of time. So I think it all boils down to, from our economy perspective, that the domestic economy being, the domestic consumption being 60% of the GDP, is very important that the impact on domestic consumption is minimal from either the virus or any other thing which is happening on the global front. And so far it has been globally. If you go back and see historically, India has been more insulated. So should be the case this time as well, barring for the impact of coronavirus, which we need to see how it pans out in India.
Some important flashes at the bottom of your screen. Economic Affairs Secretary saying India markets falling on global cues, coronavirus, positive impact as far as crude going down, and we have sufficient foreign exchange reserves if the need be. So fall in crude prices is a positive for India. Fundamentals of Indian economy continue to be strong. Of course, these are statements which are coming in and will come in through the day as well. Rahul, this is the point that we were discussing, that, when we look at earlier years, say a 2013 or 2008, the forex exchange reserve was a problem. With the situation right now, you believe the impact will be lower, or it's difficult to say?
No, I think impact will be lower because if you recollect at that point of time, also the current account deficits were high. Today, the current account deficit structurally has been low. Our fiscal deficit is high, but it's still under manageable kind of number. So I think generally speaking, the macro is in much better shape. Even though we have been slowing down as an economy, and there is only a gradual way out of that. So I think, so if you recollect, in 2013 we were almost close to being classified as fragile, one of the fragile countries in terms of macroeconomics. I think that is no longer the case because we have gone through our own cycle of whether it's NPLs or domestic slowdown or the NBFC crisis. So we have been having our own domestic cycle, which has gone on for now last 3 years, where the slowdown has been fairly pronounced for our own homegrown problems. So to that extent, I think the impact or the exact impact in terms of completely tying up with the global cycle should not happen. But as I said, in the short term, there is obviously going to be a risk of reaction, a knee-jerk reaction across the markets, which is what we are seeing. So in the short term, that need not be true. But over a slightly longer period of time, I think that should bear out.
Okay. Rahul, as of now, we've got some commentary coming in from agencies saying that the fall in crude is positive for India. This is the Economic Affairs Secretary. Indian markets are reacting to global cues, and fundamentals, of course, remain intact. He's also mentioned we have enough foreign exchange reserves. While we're discussing, how India stands on the back of crude, the fact is that it's also going to be about demand. And if we do see that global slowdown, how much really can we remain insulated on the back of how trade's going to be impacted, how demand's going to be impacted, how flows will be impacted?
Yeah, our share in global trade is much lower than our share in the global GDP. So to that extent, we are less impacted. In some cases, like these in the supply chain logistics, we might actually gain out of this situation, but that's a slightly longer term advantage. I think on the commodity side, we will obviously not be insulated. So whichever part of the corporate earnings which is linked to the commodity earnings, there the impact will be there and immediate, starting from next quarter. So to that extent, I think the earning cuts will happen, but they will happen mainly from stocks or companies which have earnings linked to the global commodity space, and there are a few. There's no denying that. As far as the domestic consumption is concerned, I think post a good monsoon, good rabi crop, and good rural income recovery, we were expecting in June and September quarter the rural consumption to start looking up. That could still happen, given that government gets a little bit of more ammunition on the fiscal side with the crude decline, and potentially their ability to increase the tax revenues by increasing excise or duties on the petroleum products. I think that's a counterbalance for the government expenditure to continue to be up, even though tax revenues come down, which is more on the personal tax or the corporate income tax. So therefore, I think there are a lot of moving parts here. Broadly speaking, 60% of the economy or GDP is consumption. We have seen a slowdown in consumption already over the last 18 months. We are seeing some potential for recovery in consumption coming in from the rural side, given what I said. And in between all this, the impact of virus obviously is contained. As of now, we need to see how that is. But in between all this, crude has declined, which gives slightly more elbow room to the government to maintain its fiscal and continue to keep spending. So that, I think, is where the scales might tilt in favor of a much lesser impact on the domestic consumption rather than a bigger impact because of the global slowdown.
Rahul, we'll leave it there. Thanks so much for joining us this morning.